Hi, welcome to Nutmeg's Investor Update for July. My name's Nicola Rowledge. I'm the leader of people here at Nutmeg. I'm here with Shaun, our Chief Investment Officer. Hi, Shaun.
Hello, Nicola.
Shaun, can you tell us what's been going on in the markets this month?
Well, Nicola, in June, financial markets were relatively stable, but in the last week of the month, we saw some quite big losses in equity markets and in bond markets, particularly here in the UK. So the FTSE 100, the main index of UK stocks, lost almost 3%, and similarly in Europe, an almost a 3% loss, and UK government bonds lost more than 2%. So some quite big moves in over June, but mainly concentrated in the last week of the month.
So what caused these losses?
There are a few factors at play in June, particularly in the last week of the month, but the main trend is that central banks are thinking about when they start to unwind all this emergency stimulus. So really it's all about the threat of higher interest rates.
And how have Nutmeg portfolios performed?
Against the losses in the broad markets, the UK market falling by 2.8%, gilts losing 2%, Nutmeg portfolios lost between 0.2 and 0.8% during the month. So a bit better, and it's disappointing to see losses, but it really shows the benefits of having global diversified portfolios. Our holdings, our exposures to Japanese and emerging markets did really well, and our low risk bonds also lost quite a lot less than you see in the broad market. So it's a real way we position portfolios for the prospect of interest rate rises that's helped Nutmeg portfolios over recent weeks.
And what changes have you made to portfolios?
In early June, we cut our exposure to UK equities and moved that money into Swiss and European equities, and that's helped to some extent. But as a generalisation, our portfolios are built and managed in a way to expect higher interest rates as central banks start to think about how they unwind all these emergency measures they've put in place. It's really since the financial crisis.
So you mentioned a possible interest rate rise. Could you tell us more about it and the potential impact on the markets?
Yes, central banks around the world are now starting to talk about how they unwind the stimulus measures they've put in place over recent years to support the economy, to stop economies going into deflation, that is falling prices. Here in the UK, the bank put in some measures in place after the Brexit result to try and help banks lend at a lower cost to UK consumers. The bank's actually starting to openly discuss how it unwinds those measures and when it does. So that doesn't necessarily mean we're going to get the bank rate going up anytime soon, but the bank is starting to think about how they unwind stimulus. So I don't think the bank rate is going to go up this year, but it's more a prospect for next year.
So Shaun, this next question is from one of our customers, and they've asked, the MSCI has announced plans to include mainland Chinese equities in the emerging markets index. What does this mean for my investments?
MSCI is an index provider. That means it tracks the performance of various stocks and various markets around the world. Now, it has quite a great deal of influence on how people invest. So if MSCI decide that onshore mainland Chinese equities should be considered part of the broad emerging market index, that means more money will flow into Chinese stocks, pushing up the value. Now, at the moment, MSCI have announced plans that in May next year, they'll start to include a small proportion of onshore stocks, around 222 stocks, into this broad index. That will only raise the proportion of China in the index from 28 to 29%. So it's only a really small change. But over the long term, the potential to add all these mainland Chinese stocks into the broad index would actually raise the China weight to about 40%, which of course would push a lot more money into China and push up the value of these stocks. So to answer the question directly, how does this affect Nutmeg portfolios? Well, we own Chinese equities indirectly through our broad exposure to emerging markets. And if this announcement does push up the prices of Chinese equities, this would benefit our portfolios.
Shaun, thank you very much.
Thank you, Nicola.
And thank you for watching. If you have any questions for Shaun, you can use the usual channels using our Twitter handle or put it in the comments below. See you next month.